There is no denying that the real estate market is in a bubble.
Every single part of the mortgage market has been discussed.
You've got to be kidding that this is not going to be a recession.
This is a market that has a wild day when it's 20 points.
That's a distressed seller.
It took 2 years before we saw 2 million homeowners become delinquent back in 2008. Now we're seeing that level of forbearance volume in a couple of weeks.
With close to 4 million mostly government-backed loans, it alone has already granted over 80,000 forbearances, and there are more coming in.
Talk about housing bubble has receded just as the bubble has grown.
We're headed for a recession. It's going to be worse than '08.
There is no denying that the real estate market is in a bubble. The year 2020 is going to go down as the worst economic year in modern history. We have lost more jobs in the last 2 months than any other time in history. The highest unemployment in 1982 was 780,000. The official unemployment rate hit 14.7% in April, its highest it's seen since the Great Depression, when it exceeded 25%. The actual figure today may be closer to or even above 20%. A depression label could be appropriate if the unemployment rate exceeds 20% for a long period of time. To say this is going to change everything is an understatement. The housing market will get turned upside down and inside out. And honestly, no one knows what's to come. History doesn't repeat itself, but it rhymes.
Millions of Americans own a personal computer. If you're one of them, you can now glimpse the future with nothing more than a modem, a phone line, and a few dollars a month.
The dot-com bubble began in the mid-1990s after the release of the easy-to-use Windows Microsoft 95 operating system. As the home PC became mainstream, it gave rise to over-speculation on future online consumption. Investors flooded the stock market with wild speculations on internet stocks. The market topped in March 2000 and quickly declined from its peak. From 2000 to 2001, the Federal Reserve, in a move to protect the economy from an overhauled stock market, lowered the federal fund interest rate. The dot-com bubble, along with the attack of September 11, took rates to record lows last seen since the 1950s and 60s. Then in 2003, in an attempt to increase the percentage of Americans with home ownership, President George W. Bush passed a bill called the American Dream Down Payment Initiative to help improve the percentage of home ownership.
I do believe in the American dream. I believe there is such a thing as the American dream. And I believe those of us who've been given positions of responsibility must do everything we can to spotlight the dream and to make sure the dream shines in all neighborhoods, all throughout our country. Owning a home is a part of that dream.
This assisted families in down payments and lowering requirements to purchase a home. This is the first time that they have tried improving the percentage of home ownership. The renter-to-buyer percentage has always maintained around 60%. 60% of homeowners and 40% renters. And this right here is really where the first real estate bubble started.
May post another $2.5 billion write-down on home loans in the third quarter.
The financial crisis of 2000 and 2008. Fueled by low interest rates and loose mortgage regulations, it took real estate just over 3 years to reach its peak in 2006. This was by far the biggest real estate bubble in U.S. history. To make matters worse, subprime mortgages were packed into mortgage securities and sold on Wall Street. Mortgage securities gave Wall Street the opportunity to damage the only asset to this point that had not exploited. It encouraged investors to widely over-speculate on previous stable real estate markets. When the Fed increased the interest rate in 2005, it quickly put many Americans in a position to be unable to cover their mortgage, popping the first real estate bubble in 2007 and 2008. Nearly 10 million Americans lost their home when the smoke settled. The United States passed the Dodd-Frank Act on July 21, 2010, responding to a widespread call for changes to the financial regulatory system. The bill tightened regulations to try and prevent loose standards in subprime lending. The biggest financial crisis was followed by the biggest economic expansion and bull market in U.S. history. The stock market rallied from its low in 2008 to peaking in February 2020. In just 12 years, the Dow went from 8,000 to 29,000. Real estate bottomed in 2011 but also rallied to surpass its 2008 bubble peak. I hope this fact alone is enough to prove that we are once again in a real estate bubble. Housing has long been the family's largest expense and biggest debt burden, leaving many Americans once again holding overpriced real estate. This time it was not due to subprime mortgages, but due to a decade near zero interest rates, low inventory, and high building costs. Bubbles are local because real estate is local. Truth is, real estate's all about location. Not all markets are in a bubble. There are many markets across the nation, markets within markets. It would be impossible for me to predict. It is safe to say, though, that the National Real Estate Home Index shows real estate is in a bubble. 3 real estate markets. Real estate can be divided into 3 different types of markets: cyclical markets, linear markets, and hybrid markets. Cyclical markets are those markets that have seen the highest highs. Markets like Seattle, a lot of the West Coast, Texas, and Northeast. These markets have had strong demand with many new builds. These are markets that far out exceed the inflation rate and growth in national wage growth. If cranes are in the air, beware. These markets will have the largest swing towards the downside. As they say, the taller they are, the harder they fall. Linear markets. Linear markets follow market growth that more accurately reflects the true value of the real estate. These are markets that more closely follow wage growth that have very weak highs. These are primary markets in the Rust Belt or the Midwest, like my home state, Illinois, and the city of Chicago. Chicago, for example, has not reached its previous 2006 bubble high. I am not saying Chicago is going to go through a market correction, but it's not going to be like a San Francisco. Hybrid markets. Hybrid markets are markets that have a little bit of both. They are not fueled by the wealthy tech industries, but do see some strong growth for economic expansion. Much of Florida, for example, is a hybrid market. It has had high appreciation since the financial crisis. The state of Florida, especially Miami, has seen a real estate boom. That is why it's in my top 3 biggest bubbles in real estate today. It has lost a lot of its tourism, one of the greatest drivers of its economy. It relies on hospitality for most of its income. Remember in 2008? Florida, along with Nevada, California, and Arizona, was one of the worst hit. But when money is tight and people don't have jobs, summer homes are usually the first up for liquidation. Florida also has a lot of short-term rental and Airbnb. And believe me, short-term rental investors are the first ones on the chopping block. There will be some great deals on the horizon. So when is it a good time to buy, and how do I know? For homeowners, if you are buying to live in because you had a life change, had a new baby, or you need to downsize, it's always a good time if you are financially ready to make that move. Real estate is a long-term investment. You should be looking to buy and hold for a decade or more. Real estate is and will forever be the best tool to hedge against inflation. And if you don't live in a cyclical market and you pick the right appreciating neighborhood, you are always going to win. Even if you buy at 5 to 10% above, it's not that big of a deal because inflation alone will cover that just in a few years' time. For those of you who want to buy a house or are considering buying a home in the near future, the next 2 to 3 years is going to be some of the best buying times to buy a home. Real estate prices are going to trend downward, and I believe we are going to see pre-2015 prices. In the end, real estate is a part of a market that has upward trends and downward trends. If you buy when it is trending down, you will consider it a great buy. Remember, unlike the stock market, not only will your investment go up, but you will also be able to enjoy your investment by living in it for the next decade and then likely sell for a profit.